Hi everyone, hope you all have been doing good and enjoying the holidays. For those who have not seen my videos previously, I started my investment journey with YouTube during the last week of January 2021. That is when I started an account with WealthSimple Trade and started buying dividend stocks. So today at the end of the year, I will go through my portfolio, the current worth, an overview of the stocks that I own, and the total dividends I earned so far. Currently, my portfolio is just over $11,900, an all-time gain of $1,500. That is around 15%. Technically, it is a bit more than 15%. If you look at my final net deposit, it shows $10,393, which includes the dividends which has been reinvested as well. The total money that I have invested into this account from my bank account is $4,400.43. And then I did an in-kind transfer of some of my stocks from BMO Investor Line account to this TFSA account. That was worth around $5,197. That is this big jump you see here. So my total investment is around $9,600, which makes around 24% of return so far. Let's have a look at the individual stocks in this portfolio. The first one is AQN. I have 20 shares of this company with an average price of $19, a total investment of $379.95, which covers 3.08% of my whole portfolio. This belongs to a utility sector, to be specific, renewable utilities. During the later half of 2020, the stocks as well as the sector was doing really good. However, this year around February onwards, the stock sort of is going down. Even now, it is following that downward trend. One of the stock that I own which is in loss now. What I did with this stock is that whenever I had money and I noticed that the stock was having a dip, I invested more. Another stock I have under the same sector is TransAlta Renewables, ticker RNW. I have 17 shares with an average price of $19.22, a total investment of $326.77, which is 2.69% of my portfolio. Just like AQN, this stock is also currently in loss. But I do believe in these two companies and in this sector. So these are for long term, and that is the reason why I kept on buying during the dips. My plan is to invest similar amounts in AQN and RNW. Next is a telecom company, Bell Canada. I have 5 shares of BCE for a total investment of $292.95. That is, with an average price of $58.59, it makes up 2.76% of my portfolio. So far, I have very good returns on this stock, and as you see for this 1 year, the chart is a growth chart. A bit down during the September-November period, and as you know, the market was not that good during that specific time frame. The next in line is one of a giant Canadian company, CN Rail. I have 4 shares with an average price of $131.98, a total investment of $527.92, which is 5.24% of my portfolio. Good returns so far. This year has been a topsy-turvy for CN Rail, the failed bid for KCS and the changes within the company after that. But irrespective of that, company did really well this year and is a good stock to own for long term. Next one is Kenoi Income Fund. This is an asset management industry stock, belongs to financial sector services. The reason I bought this stock is purely for dividends. I didn't expect much of a growth from this stock, however it did really well this year, currently trading around the highs in the last 5 to 10 year range. I have 20 stocks with an average price of $11.59, a total investment of $231.08. That is a 2.23% of my portfolio. Another stock that I have from the financial service is Cibc Bank. I have only one share at a price of 124.07 cents, a small 1.2% of my portfolio. Currently, I have very high returns from this share. The high price of the stock and the high return is the two reasons why I was a little hesitant to add more to this company. I will be keeping some money aside next year for this company and will wait for the right moment to invest that in. Now to the sector that dominates my portfolio, energy sector. I have 5 stocks that fall under this sector. The first one is Imperial Oil. I have invested a total of $316.60 in 9 shares with an average of $35.18, which is 3.4% of my portfolio. It has been a good year for energy stocks, specifically oil and gas stocks. Same with this stock. This had a great 2021. It has also provided me with a good return. Pembina Pipeline. I have 13 shares with an average of 37.73 per share, making it a total of $490.49, which is 4.2% of my portfolio. Just like Imperial Oil, the year was really good till November, where the stocks plunged. Now it has slowly started recovering, a good time to buy more. Keyera Corp, another oil and gas midstream company. It did well, but compared to the other two, not much. From October onwards, there is a downward trend. I have 9 shares with an average of $26.11. A total of $234.98, that is 2.16% of my portfolio. I do have 2 more energy stocks which I will cover at the end because of different reasons. The next 2 are REIT stocks. The first REIT stock that I have is Smart Cinders. So REITs has been doing great this year. It continued the upward trend that started during the middle of the last year. Also, as the shutdowns and lockdowns was relaxed, there was a lot of optimism among investors that propelled the growth. And I believe this optimism will be continued to the next year and we can see the growth. Unless something really bad happens with the pandemic. I have 10 shares with an average of $26.86, and that makes up a total investment of $268.60, which is around 2.7% of my portfolio. The next REIT is Ryokan. I have 11 shares with an average price of $19.84. That makes up 2.1% of my portfolio, a total investment of $218.26. The next company is Labrador Iron Ore, ticker LIF. I have a total investment of $665.96, 18 shares with an average price of $37, which is 5.7% of my portfolio. They are a very high dividend paying company. It has been great first half and equally bad second half. I do believe in this company and that is the reason why I never missed a chance to buy during the dips. The next 2 are ETFs. XIU, which is iShares S&P TSX 60 Index ETF. It has the top 60 TSX stocks in its holdings. I have only 5 shares with an average price of $26.27, a very small percentage of 1.38% of my portfolio. This year has been great for this ETF, an annual return of around 25%. I should have invested more into this, something that I'll be doing next year. The second ETF is Investco's Nasdaq 110 Index ETF. The ticker is QQC. This is comparatively new ETF. Inception is this year around May, and so far it has been doing amazingly well. A return of around 30%. This is a great ETF for Canadians who is looking for an exposure to US Nasdaq stocks. I have 14 shares with an average price of $23.45, which makes up to 2.96% of my portfolio with a total investment of $328. The next company is something that I have recently added, Hamilton Thorne Limited. It is a company that develops, manufactures, and sells precision instruments and software for healthcare sector. Most of my stocks here are dividend stocks. However, this stock I invested mainly for its growth potential. If you look at the 5-year chart, it had a perfect growth chart. Currently, I have 20 shares with an average of $2.09, which is a mere 0.35% of my portfolio. If you have seen my portfolio videos before, you would know that after opening the WealthSimple account, I transferred some stocks from my BMO Investor Line account to here. These stocks make up the bigger share of my portfolio. I have 18 shares with an average price of $67.95. That is a total investment of $1,223. This is the largest single company in my portfolio in terms of the total return value, covers 20.7% of my portfolio, and since I bought this during COVID dip, I have an amazing returns. Financial sector did exceptionally well this year and hence the great 1-year growth chart for PMO. The next two are the remaining two energy sector stocks. C&Q. This covers around 9% of my portfolio. I have 20 shares with an average price of $36.32. The 1-year chart of this stock is amazing. The next one is Enbridge. I have 43 shares with an average price of $47.55, a total of $2,444.65. My largest single investment. It covers 17.9% of my portfolio. The year was good, however, little downward from November. The last one is Manulife. I have 50 shares, the most number of shares of an individual company, a total of $1,197.15 with an average of $23.94. It makes up 10.16% of my portfolio. I'm not sure what to say about the 1-year graph. It's a kind of topsy-turvy. Not bad if you look at the returns. It sits at okayish mark. However, it's very hard to predict. I may not be investing more on Manulife at this time. So that is a very high level take on all my stocks in the portfolio. Here is my portfolio in a graphical representation. This is not based on the current market value, but the actual based on the amounts I have invested. And as you can see, the top three are Enbridge, BMO, and Manulife. BMO and Manulife, most probably I won't be adding more next year, but all the other, yes, I will be looking slowly to build on to those percentages. The two ETF, that's just 1%. That is one which I would love to see at least grow to 5% by the end of the year. The other ones that I believe in low percentage right now is Cibc Bank and the two REITs. So hopefully by the end of next year we can see a good improvement in the allocation of these 5 stocks. Now if we look at the portfolio graph from a sector perspective, energy sector has the most investment. 40% of the total portfolio belongs to these 5 energy stocks. The next is financial sector. This is definitely not a model portfolio that I have in mind. I will be increasing the allocation for ETF, REITs and utilities next year. I would be keeping the financial at around 30%, which means I have to bring down the energy sector to around 30% as well. The main aim of this TFSA account is to create passive income, and hence most of the stocks I have here are good dividend yielding high quality stocks. As you see the dividend graph for the year 2021, it started from $1 in February to $60 in December. I still have to receive some around $1.33 in the end of December, which will make it the largest payout month for the year. As you see, June, September and December are the largest paid months, and that is mainly because of Enbridge and Manulife. The aim by end of the next year is to have a minimum of $50 in dividend every month. Now let's look at the total dividends earned from each company. The columns here are the total dividends per month and the row is the total dividends from each company. As you see, the largest dividend is from Enbridge. They have a very high yield and also have a large share of investment. The next is BMO and then the Manulife. However, the highest yield of all is Labrador Iron Ore. From a $665 investments, I have received $32 as payout. That is amazing. Hopefully they don't reduce the dividend next year. Kenoi Income Fund also have a good yield. The highlighted row is for Sienna Senior Living. I used to have 8 stocks which I sold in October. Overall, I had received a total dividend of $373.98. So that is an overview of my portfolio for the year 2021. If you are new to my videos, please subscribe to my channel. If you like my videos, please hit that like button. That will help in getting this video to other people's homepage as well. I hope we all have a great 2022 and put us a step closer to attain the financial freedom. Wishing you all a happy new year.